I'm headed to the gym this morning before the stock market opens. And guess what? It's earnings season again, folks. And this earnings season, I want to just give a warning once again to something I see happen way too often, and that is I see so many people come into earnings season, they had a good streak of trades, maybe they had a couple good months, couple good weeks, and then they get into earnings season, they find this need to start pressing trades. And what ends up happening is I start giving up a lot of gains very quickly during earnings season. The reality is that during earnings season, you have about a 50-50 chance of making money on any given trade. Essentially, it's very much a binary outcome. And the funny thing is, I'm actually not quite sure why people feel so compelled to press trades during earnings season. It's the one time during sort of your monthly or quarterly cycle when people feel more compelled than any other time to press trades, to make essentially trades that they otherwise wouldn't do on completely binary outcomes. Now, I can understand the fact that some people consider it lucrative that a stock is going to make a big move in one direction or another, but people, by taking these trades before earnings and essentially betting on a specific outcome, they are making a complete gamble, and they're really focused on the outcome, the potential gain, as opposed to the risk involved. They look at a stock and say, let's say it's Amazon.com or Netflix, and they see that the stock, basically moves, let's say 5-10% after earnings in any given direction after earnings reports. Now that's the reward. The problem is you never know which direction it's going to move after earnings. It could be higher, it could be lower, you really don't know. If you look at it historically, it's about a 50-50 chance. So this earnings season, I want you to be patient, to wait for any given company to report its earnings first, wait for the dust or the news to settle, and then you'll start to see that much better, much higher probability trades will start to set up after the fact. So let me show you one real quick example of a stock that after earnings initially actually traded higher, and then within about the subsequent 1.5 days quickly reversed to the downside. Once again, just highlighting the fact that you don't know what the immediate term reaction is after earnings. Wait for the dust to settle and then start initiating trades.
So as an example of a stock that initially after earnings gave us a bit of a fake out move and then actually went completely the other direction, here's one example. This is shares of JP Morgan. You can see a big rally here over this time period, and then it started consolidating into earnings. So the earnings date for this stock was actually right here, this little day right here. Let me zoom in even more so you can see this better. And basically what happened on that day is that the stock opened a little bit higher on the day, actually rallied intraday all the way up here, basically, pretending to break out of this entire range. But you can see that by day's end, the stock had reverted back down to the lower half of the trading day. So this breakout here was basically negated. So again, anyone that was betting on this stock breaking higher, or because the initial reaction ultimately looked good, and then maybe they would have added that position, they were just, would have been brutalized very quickly. The point is to remain patient, and look what happened the very next day. Very next day, the stock gapped lower, literally opened down meaningfully lower than where it closed the previous day, and thus completely going the other way. So this is why I'm telling you the much better odds take place after a stock has initially settled after earnings. In this case, the trade to the downside would have been had once the stock started gapping lower. Now, of course, I don't know if this trade's going to work out because I'm recording this in real time, but the point is that you couldn't really make a decent bet based on whatever outcome you had, because the stock initially went higher. That would have freaked out anyone that was short, and then sure enough, a day and a half later, the stock actually gapped lower. So the much better odds for trades happen once a stock has actually reacted to earnings and the earnings news has been digested, and you can see here the truer price action, arguably at least for a multi-day, multi-week lens, looks to be to the downside.